It's Halloween, Friday the 31st. Some weeks I feel as though I have a fair idea of what's going on and try to describe, and usually by sort of bracketing the future as it looks as though it may take place. And other times it's so uncertain that all I can do is talk about it, and that's today. Earlier in October, we had an amazing drop in the stock market that looked like a black October unfolding. Today, new highs. The U.S. economic data as covered in the press is much stronger than it really is. We are still really not accelerating. And yet on Wednesday, a Fed meeting broke with a post-meeting statement that's the most hawkish, the most aggressive, the most we're going to tighten rates at the slightest sign of anything. It's the most hawkish Fed statement in a half a dozen years. Long-term rates stayed the same. There's no big change in mortgage rates. We're still sitting down close to 4. The stock market's in hysterics. And the main development, the main news story in the background is this morning at midnight this morning, while the Western world is asleep, the Bank of Japan announced a whole new stimulus that transcends stimulus. It transcends money printing. It is something at the edge of, or over the edge of, a panicked effort to revive the Japanese economy. Japanese consumer spending has fallen in the last year by almost 6%, despite the Bank of Japan's effort to get inflation to rise, presumably to increase incomes. Instead, prices have risen, but incomes have not. The Japanese move today, they will add another $100 billion to the world economy in its own version of QE, which I think everyone inside the markets thinks will wash right through Japan and into global stock markets, which already have too much money. Japan also announced that a quarter of its government pension plan, pension savings, would be devoted to Japanese and foreign stock markets. And this is not the kind of QE that we had here in the United States that was designed to pull interest rates down and to help rationalize panicked markets. This is panic itself. I don't know where it goes. I think it remote that it changes the real economy. My hunch is that the Fed feels the need to raise the overnight cost of money from 0 because it fears bubbles in stock markets everywhere, and I think with good reason. The real economies now seem impervious to central banking efforts to rescue. The central bank did some timid things this week and has some more things coming, but it's so late and the efforts are so small that the damaged European economy probably can't react either. But all the charts are next to this video, and they're worth a glance. These are charts of currencies, bond markets, the job market, and also the energy markets, and they're illustrative of an odd situation. Not necessarily dangerous, especially here in the United States, but decidedly odd and unstable. Best to you.